So let's talk about the primary markets now. If you fancy drinking whiskey, especially Officer's Choice whiskey, then perhaps you'd like to look at the makers of this as well, Allied Blenders. The IPO opens today. Mangalam is here, joining in to tell us what to expect with this one. Mangalam, morning.
Good morning. So the IPO for Allied Blenders and Distilleries, or ABD as we call it, opens today. Opens today for the next 3 days with an issue price or a price band of 267 to 281 rupees. They're seeking about 1,500 odd crore rupees, of which fresh issue would be 1,000 crores, and the promoters will be selling 500 crores with a post-issue market cap at closer to 8,000 crores, 7,860 crores to be precise. They've already raised about 450 crores from anchor investors, and some of them include some large domestic funds like Nippon Life, Jupiter Global and MNCs as well. Important to know, this is the largest India-owned Indian-made foreign liquor company, the third largest IMFL company with a pan-India sales and distribution. You would know it better as the company that owns and sells brands like Officer's Choice Whiskey, Officer's Choice Blue and Officer's Choice Sterling Reserve. Whiskey accounts for nearly all of their sales, and it's a strong brand. So that's one strength of the company. They have market leadership in the mass premium segment with almost 21% volume share, and the possibility of them scaling premium brands like Iconic and the other higher price brands would be a decent opportunity for them. The biggest weakness for them would be the competition that is from peers, which is coming in, the larger domestic and MNC peers. We have the margins which are 7%, which is again lower than United Spirits at around 18%, Radico Khaitan at 12%, and it's an alcohol industry, right? So there will always be some sort of regulatory overhang which may play out. They've done revenues of almost 2,600 crores in the first 9 months of this year with margins of around 7%. The money that they will raise will be used to repay debt. So the debt that they have is close to around 800 crores. So that will aid their profitability as well. Their valuation that they're seeking is around 2 times sales and 31 times EV to EBITDA, which is actually a lot lower than 8 times sales that United Spirits trades at and 6 times that Radico Khaitan trades at. But at the same time, from an EV to EBITDA basis, they're pretty much about a 15 to 20% discount. Let's see how it goes. Reducing debt, increasing profitability, and increasing premium products would be something that the street would eye.
All right, Mangalam, interesting one. Thanks very much for that. And of course, we'll track how the subscription, etc., plays out as we go along.